Good afternoon, everyone. Amazing turnout. A very warm welcome to BII's London office, and to those joining us online, thank you very much for being with us in presence and virtually. A special welcome to the Chief Minister of Sierra Leone and his ministerial delegation. We are honored to receive your visit. Thank you very much. Another welcome to the British High Commissioner to Sierra Leone here with us today. Another warm welcome to the Sierra Leonean High Commissioner to the UK. And not least, another welcome to the Zambian High Commissioner to the UK. It is my pleasure to welcome you all to our Impact Equals event on building investment ecosystems in frontier markets. And I am really delighted that so many of you are with us in person and online. Frontier markets represent some of the most complex and challenging investment environments in the world. But it's not a secret, and I think everyone in this room and joining us online know that these are, in some ways, amongst the most rewarding and the ones that harbor the most growth, innovation, and resilience of types of investment markets. And yet, somehow, these are the most untapped, the ones that still do not receive the attention they deserve. At BII, we believe in investing in frontier markets with a distinctive approach. It takes time, effort, and deep partnerships. It demands the use of all the tools at our disposal, from blended finance to local currency lending, technical assistance, and policy engagement. So today we've created this opportunity to explore what it really takes to build resilient, scalable investment ecosystems in these markets. We'll be hearing shortly from a prestigious lineup of speakers who bring deep expertise and bold ideas to this conversation. We're very honored to have you all with us, and we look forward to your insights. Now, there are 4 key themes that we're really hoping to cover today. The first one, how do we create enabling environments for investment? The second one, what is the role of the government in facilitating private sector development? Number 3, how can us DFIs act as first movers? It's our responsibility. It's what we want to do. How do we do it? And what innovative financial tools do we need to develop and deploy to mitigate risks and catalyze investment? Before we begin, a quick reminder for our online audience, there is time for questions at the end of the session. Please submit yours via the Q&A function. Thank you again for joining, and let's get started. We will start with a keynote conversation. We want to explore the geopolitical context and the critical role that governments and private capital play in driving development in frontier markets. So I'm sure you know this is timely discussion, 2025, restrained, constrained resources in a way that we haven't seen perhaps ever before in the development finance and development space altogether. And yet, we sometimes, until now, have had kind of 2 parallel variables that have not maximized a way to engage in order to support job creation and investment. One variable is the world of public institutions, governments. The other variable is private investors. This is about mobilization. It's about creating the collaborative environment, the right discussions to be able to think together to expand this pot of investment, pot of investors. So I'm very honored to invite two distinguished speakers joining us today who bring incredible insight and lived experience to this conversation. When I say lived experience, I mean, obviously, one is a high commissioner, the other one is a chief minister. One is a diplomat, the other one is a politician. But they bring very, very diverse professional backgrounds to their roles, which make them extremely catalytic to the goals that they're seeking after. May I please invite Dr. David Moinina Sengeh, Chief Minister of the Republic of Sierra Leone, whose leadership and vision has been instrumental in shaping Sierra Leone's development agenda. Chief Minister, please. I am also privileged to invite Her Excellency Macenje Mazoka, High Commissioner of Zambia to the United Kingdom.
Good. Nice to see you.
Thank you.
Can you hear me?
Yeah? Yes.
Okay. So thank you very much for joining us and for being here today. I guess to start setting the scene, it would be super helpful if you help us understand how you both see in today's global landscape specifically, what do you see the role of government is in attracting private sector investment into your countries? May I start, Madame, ladies first?
Thank you. Well, first of all, thank you for the opportunity to be here and engage. It's a pleasure always to be at the House of BII. In terms of the role of government, and speaking very generally, I think it's to be able to create an enabling environment for the private sector to come into the country. So now, how do you do that? You look at your policies. You, number one, have to engage with the private sector to be able to understand what their needs are, what are the incentives that they may require to come into a country. Of course, we have to balance out country needs with economic growth desires. But I think that that's where it starts, because in order for businesses to feel comfortable, to feel as if they're going to get some value out of their investment, it has to be a two-way conversation. And that's one of the things that Zambia has been doing, is really opened up in the way in which we engage with business and adjusted our policies to ensure that it does create an enabling environment and an attractive environment for businesses. But then businesses also have to leave something behind for the country.
Thank you, High Commissioner. I've picked up a few one-liners there. If you don't mind, we might be repeating them later on, quoting your name, of course. Chief Minister, from your perspective, what do you think in the context of Sierra Leone, in the current context, how do you see kind of the engagement between government and private sector playing out for the benefit of your nation?
Thank you very much, and it's wonderful to see such a diverse crowd in the room, investors and people who care about development and government. Government and businesses care about the same thing. They want people to prosper. When people prosper, businesses make more money. When people prosper, governments flourish, democracies grow. And because we have that shared goal, prosperity, for our people, it means that we have to work together for our selfish but shared goals. It is important that the way we frame opportunities in Sierra Leone is we want you to come and make money and do good at the same time. It's important that you make money, that the market woman makes money, that the farmer makes money, that they can grow their wealth and buy more and invest more. And when that happens, it means that their daughter is going to go to school and finish school. It means that there's going to be enough taxes for us to make the road that go to their communities. And when we extend and expand access to connectivity, more rural communities are connected and are going to take advantage of the AI solutions that we are building, whether it's in South Africa or in Fele Tech City in Bo. We have to be able to ensure that we're all creating value, productivity. I like to think about it 3 Ps: people, planets, and profits. The planet has to be protected and taken care of. Profits have to be safeguarded and made, and we have to care for people as well.
So on that note, Chief Minister, then would you mind giving us perhaps an example? We know that you have already been very proactive in making reforms around digital governance and education. How has that led towards private sector growth?
It's an important point, and we could speak to any of the sectors, really. In Sierra Leone, we have what the president calls the Big Five: agriculture, education, youth employment, digital infrastructure, and public sector. But Feed Salon Agriculture is our flagship. So maybe we can speak about the president's ambitious Feed Salon agenda. A couple years ago, the president said we should feed ourselves. And we all know no country really has ever gone through any sustainable development without taking care of its agriculture and food security. We eat rice a lot in Sierra Leone. You can eat from morning to night. If they ask you, have you eaten yet? The answer is going to depend on whether you've eaten rice or not. If you have not eaten rice yet, you will say, no, I have not eaten yet. And so rice is a fundamental indicator of whether we are feeding ourselves. And what the government has been able to do is to establish these hubs where we are bringing in private sector to come and invest. And we're seeing that, and now we're helping them as well with the right environment, that they can produce at yields that make it profitable. But we also engage the communities. The minister was just out with the president in farms. We want all the chiefs, all the local chiefs to participate in valley swamps. We want them thinking about climate as well a lot, and thinking about available technology and resources. Water is in the swamps, and it's easier for them to do it. And so you help them guide with the right set of supports through extension workers and farmers. Then they can grow more food. But then the ministry is bringing all these mills, concentrating the mills, so it's easier for those communities to harvest. And we work with communities for them to purchase seeds and to plant and get the right set of messaging using the technology that we deploy so that they can ask questions. The impact is you have a young boy called Usmania, young gentleman in his mid-20s, who now is producing hundreds and thousands of bags of rice from his community and selling that rice to the WFP, who's getting money from governments to feed school children. Food chain, the youth are employed, rice productivity increases. WFP now has 40% of its local produce, local rice is purchased locally. And Usmania makes money. The women he works with makes money. And we can slowly go towards feeding Sierra Leone.
Thank you. High Commissioner, do you have any examples from the Zambian perspective of notable reforms that you can already see that are palpable in the Zambian population?
Well, there are quite a few. Similar to actually Sierra Leone, we have our schemes in terms of with farmers. So giving them seeds at a certain price and then purchasing their yield at an agreed upon price as a way to incentivize farmers to do more farming, because food security has been an issue. So that's one of the things in which we're doing. And in terms of other projects, I mean, they vary across sectors. But one of the things that is very important for us is to ensure that our local small and medium-sized businesses are well-funded, if you will, or at least have some access to capital, whether it is to training or whether it is to even just funds that are available for even local businesses within our different provinces to access to be able to execute. Now, what do I mean by that? We've decentralized our national funding model. At one point, all of the resources were kind of distributed from Lusaka. When the president came in, he created the CDF fund, and so what happens is that every province now has their own budget to be able to manage their own local and provincial resources, to hire whether it's small, medium-sized businesses in their communities to execute projects on the ground. So therefore, you keep everyone out of the main city. And it's a way of distributing the wealth and with projects and growing businesses across the provinces throughout the country. Because I think a lot of our countries have challenges where everyone migrates to the big city. Everyone, that's the main goal. You want to get to Lusaka, you want to get to Johannesburg, etc. But this is a way to try and at least help support businesses and our youth as well in all of the provinces. So those are some of the innovations.
Thank you.
And they're just going to keep growing.
Thank you. I wanted to ask you a question around impact, but both of you have already answered it. So you're making my life very easy and allowing me to actually ask you for suggestions for us, BII and the DFI community in general. We have several DFIs have flown in to be here with you. In this very high risk, perceived high risk environment, what partnerships would you suggest that BII, Proparco, other DFIs present should be pursuing to be able to mobilize and to achieve more impact and commercial success in your countries? High Commissioner?
Okay, thank you. Well, I mean, currently Zambia does have the Growth Investment Partners Zambia with BII. I think that's a good example of ways in which the funding can be used towards development on the ground. So that's a fund where BII has invested along with Swede Fund and our local partner as well in local capital as a way to invest in small businesses, looking at mainly women-led businesses, but others, but SMEs, and giving them capital at a fair price for specific projects. Those are innovative ways because you're looking at a mixed bag of capital and you're looking at projects where they're really needed, you know, in local communities. And we know that businesses and our economies are going to grow because of our small to medium-sized businesses. And this is a way to help facilitate them and to help them grow so that they can become the big corporates that we would all want to have, to be able to pay taxes so that we can continue to reinvest into the country's development. Working to help us keep our capital costs lower. The price of capital, we know, on the continent is just really, really way too high. How can we engage more as partners to ensure that we have access to capital that is fair and affordable? Particularly because the return on investment in most of our countries far outweighs what you might find in areas where, you know, in markets where the cost of capital is much lower.
Yes.
So, you know, with much risk comes much glory. So we need to hold hands and do that together is my view. Yes.
Thank you. Thank you. Chief Minister, what are your insights on suggestions on partnerships that we could be exploring going forward to bring more capital to Sierra Leone?
I think that if you look at the room and from the folks that we've spoken to at the British High Commissioner's residence when Aria was there and brought a team together, to teams I've hosted at State House, to people who are in here, you have several FDIs that are collaborating and co-investing. It's a good thing. We don't want to be greedy. Yes, you want the returns to come to yourself, but it's okay for BII to share in the glory and the profits with Proparco and with some other private investor. That's a good thing. We need to redefine our world so that we're going towards more equity, more justice, more sharing, collective. It's our responsibility. But the other thing, too, that I want to mention, and I know you hinted at it, the Ministry of Agriculture has a weather insurance that's available. Now, that's tied to agriculture because of unpredictable climate. And I know that BII has invested with EcoBank to make capital available, which some of the startups here have benefited from. It's a conversation I've had with BII and that bank to say, look, if you're going to make 25 million available, yes, it's okay to be 2, 3, 4 percentage points below commercial rates, and you have an additional year, but that's not still risky enough. That's cool, but that's not great. You can aim to be great. You can say, I am BII, I have 2 billion. I'm going to work with Rokel Commercial Bank, who I see in the room, and they're profitable, and Ministry of Agriculture, and I'm going to not care to give you an extra year and maybe 2 percentage points. Strike a deal, do something 10 years, 5, 7 years. Government has rolled out a program where we did 10%. We're not saying go at 10%. You still make money, and you still do a lot more good. So I think we have to, in terms of de-risking, there's always risk, but we have to look beyond risk as we know it and aim to do great things. And I hope that the conversations with government and those private sector partners and the patient capital that wants to do good. And I think it's important because we're moving from aid. Aid, maybe people didn't care about aid so much. You know, maybe you save a few babies here, save a few women there. It's good. You can go and rest. We don't want to save a few babies and women here and there. We want to be able to have those girls grow up to be amazing investors. It takes 16 years to go to school and finish. So think about that. And when you have the Africa Credit Rating Agency coming on board now this year, we need to begin to understand how we appreciate what it means when AU says they're establishing the African Credit Rating Agency, and when we say AFCFTA has to go into being, and when we speak about ETL, a lot of acronyms, the ECOWAS, trade liberalization, and all of that. It shouldn't be theoretical. It should be practical. So we should be taking more risks and aiming for great.
Thank you.
I love the idea of the great. Yes, I think it's a profitable challenge to put on the table, particularly with the Continental Free Area coming up, AFCTA, and it being embraced more broadly by our various partners. I think deeper introspection into that and engagement could be helpful. Working a little bit more collaboratively in that area, because we know that the global dynamics have completely shifted. Even as it stands, because my president always says this, he says, the time for aid is over. You know, we really have to look at how we develop our nations very differently than we have in the past. So the cutting of this aid, as abrupt as it was, as damaging as it might have been, sometimes it's a wake-up call. Time to grow up. So how do we now fend for ourselves, if you will? And it's not just on the African continent. I mean, you know, in South America and other areas where aid was, helpful. Not saying that it wasn't helpful, but it gives us an opportunity to think differently. You know, to really think differently as a global community, because dynamics are shifting very quickly and quite sharply. And many of the DFIs we have had relationships on the continent for many, many years. So let's look at how to redefine it. It's not that we don't know each other, but how do we think differently and become great together?
So on that note, and to close, can I give you both a 40-second challenge? Visualize yourself in 5 years' time, 2030, look back towards 2025, and tell me in 45 minutes what success has looked like.
45 seconds.
45 seconds. So maybe you just need to think about 3 key words. 3 key words that summarize the next 5 years.
Well, you introduced me as a politician. Politicians don't take 45 seconds. But our national development plan says that by 2039 we'll be a middle-income country. I think it's possible, but I think in fact we can accelerate towards that. It's going to require good private sector partners, great investors, and good governance and leadership. What President Bill has established is a foundation for all of those. And we will be in the driving seat to continue that vision, even beyond President Bill's singular term as presidency. And that's really important. I believe that we will deliver on that commitment of making Sierra Leone a middle-income country by 2039, I think well before.
You'll be on your way.
Absolutely.
High Commissioner.
Well, we actually have a similar line in our national development plan as well in terms of being a middle-income country. But I would say more infrastructure development, deep economic growth, more youth involved in the growth of our country, more sustainable mining. Our economy has grown quite a bit in the last 3-4 years with the investments in mining, the reinvestments that have come in mining. We've had some challenges with the debt negotiations, but we've overcome that, I think, in the most brilliant fashion, if I might say so. It's been very tough, much longer than we expected, but here we are. So I would say more innovation as well. Data centers are big in Zambia. We're growing them to really be able to control the narrative and to control our systems, et cetera. And the 5 million tons of copper coming out of our earth.
Okay.
That was a big one.
Thank you very much. Please join me in. Thank you.
So I'm Alex Kucharski. I work at BII, focused on market creation initiatives. We have some in Sierra Leone, in Zambia, and in Nepal, which we'll hear about today. So we're very excited that through these initiatives, we complement our investment strategies with ways to build the investment ecosystem and to enable us to invest more further down the line over the long term. So I'm joined by a really great and diverse panel of investors, ecosystem builders, asset managers. So starting with Jiwoo. Jiwoo, you work at Acumen. Maybe you could introduce yourself, and then we'll do a round of introductions, and then I'll do questions if that's okay.
Thank you. My name is Jiwoo Choi. I'm Chief of Strategic Initiatives at Acumen. I joined Acumen about 4 years ago, and before Acumen, I was in the impact investment space for 10 years, and I was Chief Risk and Sustainability Officer for a commercial bank called Shinhan Bank, leading the net zero strategy for the bank. And that bank became the first net zero bank in Northeast Asia. And before then, I was in Dubai, working with the government, setting up a new sovereign fund dedicated for green investments called Dubai Green Fund. And I was actually with Green Climate Fund in very initial years, heading up the private sector operations. So that's my 10 years. And before then, I was in boring, I have to say, conventional finance in 15 years, rating agency, asset management, and investment banking.
Great, thanks. Chooks?
So my name is Chukwuemeka Chikezie. It's a very Igbo Nigerian name. I'm half Nigerian, half Sierra Leonean. I work for Invest Alone, which is a ecosystem partner with BII. We work with firms directly, we work with investors, and we work with the policymakers. And I would say, in one of the organizations, institutions really championing public-private dialogue within Sierra Leone, and particularly with a view to improving the investment climate, strengthening the ecosystem. My route into development is not conventional because 30 plus years ago here in London, I co-founded an African diaspora organization, the African Foundation for Development. And that was the way we always saw the agency of the African diaspora, which goes back as far back as 1787, when the diaspora were very active involved in the struggle against slavery. And the first ship that went to Freetown in 1787, one of the key drivers of that was an African diaspora, Lauda Equiano. I'm mentioning this because I think, as we know now, we're coming to the end of the aid as we know it, and the issue of African agency is going to be very paramount as we start to think through and how we solve our very compelling challenges. So, as I said, I've had an eclectic background, starting in IT, media, lecturing, and so on, and consulting. And I'm still learning, so bear with me.
Hello, good afternoon, everyone. My name is Alain Siona de Fiz. I am born in Kinshasa. I'm a child of the Democratic Republic of Congo. Then I grew up, I spent a lot of my years in Europe. Career-wise, I don't know if asset management is boring or not, but I've been working for 25 years in asset management, and
I was in boring part.
but it was very, very exciting because 20 of these years have been spent investing in emerging markets, and especially in emerging market corporate debt, which is an absolutely fascinating asset class. I was lucky enough to start when the asset class actually was nascent. So anything we look at now, when we talk about frontier market, let's think about the trajectory, because we have a lot of success stories looking at broader emerging markets. I am also fascinated about promoting the culture of my country. So with my wife, we set up a foundation promoting Congolese arts, and that's quite very important for us to think about both the cultural aspect, the economical aspect, and we talked about the people in the continent. So very happy to be here. If somebody asks me where my suit came from, it comes from Ghana, so I'm a real Pan-African, right?
It's Tim.
Thanks, I'm Tim Gosha. I'm wearing the traditional national dress of my country. Doesn't quite meet this, but I, like Jiwoo, spent 20 years in conventional finance. Quite exciting, really. It was quite exciting until I met my wife in a school in a Himalayan mountain town in Nepal. And she introduced me both to the Himalayas physically and the Himalayas metaphorically. What could investment achieve in a country like Nepal, which is one of the poorest in Asia? And that started a 23-year journey. After 10 years of investing through non-profit vehicles, I decided to ditch the exciting conventional finance. I'd lived in London, New York, Singapore, the usual financial centers. And we moved to Kathmandu, and we raised the first international private equity fund for the country, investing, I think, really along the lines of what the Chief Minister is envisioning: for profit, for people, for planet. We are one of the largest FDI investors in Nepal. BII is one of our key partners. And I think of the metrics of impact we're most proud of is 12,000 jobs created, mostly in the technology sector. And that is 12,000 people who don't need to emigrate at a time when 70,000 people a month are leaving the country to find work abroad because of a lack of employment opportunities. So it's far more meaningful than my previous life in conventional finance. It's far more stressful and far more enjoyable.
Great, thank you. So Alan, I'm going to start with you. You're a commercially focused investor. You've invested in quite a lot of businesses across the continent. I was wondering, you as an investor, what do you look for, especially in frontier markets? What are the requirements that investees need to meet?
Thank you very much for asking, Alex. And I would say three things, really. When you target the asset management community, and I think it's important for us to target that, there's a big pot of money there available for us. I think we've discussed that a little bit earlier. The asset management community looks at a few things. especially on the corporate debt side, which is where I come from. First, we need to think about scalability. We need to think about the right sizes. It's very important when you look at all these funds that are sometimes, some of them manage $500 million, sometimes $1 billion under assets under management. They need, when you look at the deals that are coming to us, they need to be of a certain size. For example, the minimum size usually that they look for is about $100 million. But we can find ways around that, right? So that's the sizing bit is important. Because as an asset manager, we need tradable instruments. We need some sort of tradable liquidity as well. So that's very important. Number two, what we need is to have the right instrument. I think if we talk about mobilization, we need to make sure that as many opportunities as possible come under the radar of asset managers. But for asset managers to invest, we have to remember a lot of these funds cannot buy loans. So we need to find the right structure to replicate what a loan is. And then finally, if I'm sitting on the desk as an asset manager, I want to make sure that the trade you bring me keeps me in the job. So that means, what I mean by that is we definitely look at it commercially, which means that the right level of risk return, the right equilibrium of risk return needs to be met. And that's the first part of the conversation. I think there's an element as well to look at impact later on, but let's start with the risk return, which means that as a buyer, I need to be equipped to justify to my management, to justify to the investors in my fund, what's the rationale for me to take that investment. It means transparency, closeness with the management team that we're investing in. Because at the end of the day, if we lend money for 3 to 5 years, we enter a long-term relationship. So what happens? We're going to have highs and lows. We need to make sure that there's somebody on the other side of the phone. We have that proximity and that engagement. So this is, in a nutshell, a few of the key elements that are necessary.
Thank you. And Dewey, Acumen's probably on the other end of the spectrum. You're an impact investor. You're focused on the most underserved communities where traditional capital often doesn't reach. And BII, in fact, recently committed 20 million to the Hardest to Reach fund. In your view, what does it take as an impact investor to deploy that sort of capital? What sort of ecosystems do you need to see, and any partnerships to make that happen?
I believe it's all about matching the needs of company with right blend of capital. So maybe I can answer your question by sharing Acumen's energy investment story. So Acumen was founded in 2001 when our founder actually thought it's either aid or investments. Is there anything in the middle? So that's when we coined patient capital. So we started to invest in off-grid solar sector in 2007 when off-grid solar products like solar lanterns, home solar system were just ideas. So our patient capital backed by philanthropists mean that we let the company to try, and when they fail, we don't leave. We actually let them try again, bringing our social capital to fill the gap and let them try again until they build a real business model. So since 2007, we invested 43 companies. Most of the cases, we were the first institutional investors. And when this sector is about to generate profits, and when these companies were almost ready to scale up, we actually realized that there's not many early stage growth capital that can scale them up. So that's when we actually set up our first private equity funds, backed by not only philanthropists, but institutional investors to scale up the companies. And what we have seen for the 15 years of investment was from the idea to industry. And at the same time, our companies have reached more than 300 million people with clean and affordable energy access. So when I joined Acumen about 4 years ago, that's when we started to thinking about what should be our next. And then, the Kenya where we invested heavily, the Kenya was reaching close to universal energy access compared to 15 years ago. But if we look at other countries in Africa, there are a lot of countries whose electrification rate is still below 50%, which was the continent average. So the goal is set. We have to go to these countries whose electrification rate is less than regional average. So we identified 17 countries. So, and we named it as hardest reach, because these countries are actually hardest reach countries, and more than that, hardest reach customers without any access to energy. And then the next question is how? And again, what's the right kind of capital to address this issue? And so what we have done is, actually we set up 2 different vehicles under hardest reach. One is patient capital approach. We call this catalyze. So I was like banging my hands. So the first vehicle, so set up 2 vehicles under hardest reach, whose capital in total is $250 million. And so one vehicle is called Catalyze. This is patient capital approach backed by philanthropists and government. FCDO is actually one of our funders. So here what we do is we actually invest in companies in Somalia where the market is not there yet. Then what we need is actually help the company to find the right mix of products and right mix of like customers. And we have to so we brought in our company's management team to coach them to pioneer the new markets. And at the same time, we provide expansion grants and actually putting together a joint venture with regional companies who's already successful to encourage them to expand into these new countries. So that's one vehicle that we set up. And then the second vehicle we set up is Amplify. This is a debt fund to scale up the companies who actually have proven business model in the hardest reach countries. There, we actually, as you said, we have to have the right instrument, which we call impact index loans. So we don't want to distort the market. So it starts from the market rate, but discount of the pricing is actually has to be rationalized by the impact that they create. First-time energy access users, because these are the most expensive and lowest profit customers that they have to go for. So we actually, recognize and the trade-off between impact and financial return, and we provide concessionality to address the trade-off. And there we have 3 different layers of capital to bring in institutional investors, because we need capital at scale to do this work. So the junior capital is actually backed by green climate funds and government. The mass capital is actually backed by DFIs, and then senior capital is actually backed by commercial investors. And we actually brought in a leading commercial bank in Korea, AA-rated company, AA-rated, very conservative bank, to invest $20 million into this fund from their balance sheet. This was doable because of the innovative blended capital structure that we put together. So these hard things are doable if we work together. And before I close it, I actually want to shout out to the BII team, because BII is not only investor into us, but they have been a thought partner from ideation to launch. We actually launched this fund 2 weeks ago in New York Climate Week. And BII has been our thought partner from the very, very beginning. So we refined our strategy and we refined our operational platform for the debt funds with BII. So I think this is exactly the role that DFI should play together with, for private investors like us to get into the new markets.
Great, thank you. I wanted to dive into ecosystem a bit, and then we can pick up the innovative finance and blended finance aspect. So Chooks, we're close partners in Leone, and as probably most people in this room know, Leone is one of our priority markets for BAI, which is really great. We're just coming from a big event focused on investing in Leone that BAI helped organize, and through our close work over the years, we're really together trying to pilot a bit of a different approach where, apart from just investing, we're trying to work together with partners such as yourselves to help build the ecosystem so that investing becomes easier for everyone going forward. So I was wondering, what are your reflections around DFIs and their role in driving that more systemic change? And is there anything that you would recommend we do differently?
Yes. Well, I think it has been a bold move and a very welcome one. And in a way, when you do these things, you think, why hasn't this been done 20, 30 years ago? Because it seemed like such a no-brainer. You have the private sector development program funded by FCDO, and you also have BII and things like that. So, but, you're human, and therefore you get to a point of realization. So clearly it's the right way to go. And we have this week of investment conferences and right until the end of the month, there'll be a lot of work done. But I think it's worth going back to the earlier conversation where we were talking about the end of aid. And it's very important that in July, August, we had the Seville conference, and we were there with the executive director of NIB and Medabu and a few others. And it's an important moment. I think when you look back in history, we will see that there's been a paradigm shift in aid. And to that extent, the financing for development presents some new challenges, but new opportunities. And I think that DFIs are very well placed to really address this. And we had this conversation earlier today, because if you think about it, a lot of the things, like the sorts of things that Acumen is doing, or some of the other, taking the real risks and beginning with blended capital. But I think we really need to look for this catalytic capital. And think about the actors, because one of the things, we had a panel discussion, and you've got Fode from Labrum. So Fode Boya Labrum, and he is doing things, Sierra Leone is his home country, so he's building relationships with young creatives, doing it on his own back, really. And we had other diaspora investors. And the typical pattern with the diaspora investors is first it's their capital. But very quickly, of course, if it's a large, ambitious venture, they reach a point of where that's not enough. We also now have in Sierra Leone, and this is where relatively frontier market. So, I mean, we've now got angel investors, again, very early stage. And they will play an important role in the startup scene and in the tech front, but also in the other areas. And BII is already working with EcoBank, and there are other banks. Vista Bank is also now. So the local banks are also now getting capital from DFIs, which means that for their tier of risk appetite, they'll be able to put more capital into SMEs. Now, what's missing, and where I think we should put our attention, is think about, we're in London, so you think about the escalator in the London Underground. And I've always thought from years of being involved in this that the missing piece is the escalator that takes that very small venture and escorts it up the escalator. Mm-hmm. What you see is that sometimes there's capital for, it might be microfinance or whatever, for very small ventures. But then when they grow beyond microfinance or whatever else, where next? And that pathway onto the next stage is missing. So how do we, in the context of where we are now, where we've got local capital in relatively small amounts generally for small ventures, you've got diaspora capital, but also know-how networks, you've got angels coming in as well. And how do we build an escalator that takes the right level of risk, but has that growth ambition? This is not grants and handouts, but there's an early stage and there's a need. and really finding the models and the ways in which we can have this escalator, which then takes us to very high performing companies. But that early stage work, which is very messy and is happening out of passion, out of commitment, out of concern and all that stuff, it's not systematized. But that's the challenge that I see and the opportunity I see, and really coming this week back to London, thinking about what are we going to take back and go to Freetown and work on. And I think for us, that is one of the things, and I've been already pestering the Chief Minister at 1 a.m. this morning, that's what we've got to go and take back to. And I think that BII, because you've got this ecosystem piece, it's hugely important. And I know that where BII leads, dare I say it, others will follow. And then I think, so you've got to play that sort of pioneering role. And we have a role to play with that, because we do the TA work with the businesses, for instance, understand those risks. But what we've got to do, and somebody actually said this, because you tend to look at the environment and we'll say, oh, government is not coordinated. They're not joined up. It's true, they're not coordinated. Private sector is not joined up and so on. What we don't often say is the development community, how joined up are we? We're not. Very fragmented. The same political economic issues that stop government from functioning also stop development actors from functioning. So we need to turn that lens on ourselves as well and see how we transform the way we work and work. So I think it's all very exciting, and this is the right time to do it, basically.
Great, thanks. And Tim, we also work together in Nepal. You're a close partner through our Invest for Impact Nepal initiative, where we tried to build the PVC ecosystem and the financial institution ecosystem as well. Any reflections from you in terms of what are the ingredients an ecosystem needs, and what role can different partners play within that?
Yeah. I think Nepal is a great example of ecosystem building, and there are two quite unique ecosystem. One is around renewable energy, and the other is around SME, especially technology. The first thing I'll say is that I think where BII and other DFIs come along is it's essential to invest first. A theoretical policy-based ecosystem building where there's no examples, no role models of success is very difficult. I think because we were backed by DFIs, we have a few years of investment, we have some success stories. Then with the support of FCDO, BII, with the Swiss Development Corporation, helping to build the ecosystem has been incredibly successful. So in the SME technology sphere, I think we've gone, since we've been investing, from 3 funds in Nepal, or focused on Nepal, to about 20. And I think that's a huge success. So where we used to invest alone, we're now co-investing with 2 or 3 local PVC firms. I think in this space, one thing that's not been mentioned today is the AI opportunity. And some of those success stories have come from Nepal-based companies that have sold products and services in AI to the US and the EU. And that's enabled us to show a track record and generate, in terms of returns and exits, and generate huge employment. And I think for the first time, frontier markets have an opportunity to enter a global competitive market without suffering from an infrastructure deficit. Okay, BII and Dolma have co-invested in a big ISP, helping it grow. There's broadband in Nepal. I'm sure in many of your markets there's broadband. So for the first time, instead of thinking about manufacturing where you're landlocked or the roads are terrible and there's no railways, suddenly what's to stop the company Fuse Machines, which is preparing to list on NASDAQ, one of our portfolio companies, what's to stop it starting and competing with a Silicon Valley firm? Only 2 things, brains and broadband, right? There's plenty of brains in Nepal. Yes, there needs to be some training to get them up to speed, and there's plenty of broadband. So I think this is a once in humanity opportunity. For the first time in any industrial revolution, it's not based on roads, railways, power a little bit. And I think we need to grasp that opportunity. And I think that's what that SME ecosystem is starting to do. The other ecosystem is very much an infrastructure one, which is renewable energy. And I think both of these are translatable to all frontier markets. Nepal has been relatively successful developing its first hydro and now increasingly solar power resources. And that's because the sole government buyer of electricity has consistently paid its bills over 30 years to private sector power producers. And so with a multi-decade track record of no default, that's enabled local investors, international investors, we invest as equity, foreign lenders, I think BII is part of a lending consortium, to come in and really build out that capacity. I think what we including, because most of our investors are DFIs, what is different is perhaps how we treat people and planet through the IFC performance standards. One of our, what I consider a great success is the relocation of an entire community from near a river that was being flooded even before our hydropower plant was built, to higher ground, working in collaboration with the local government, with the community, of course, and the hydropower developer. So we do hold a higher standard as we develop some of this infrastructure. But I think Nepal is now exporting a lot of its power, clean energy, it's all clean energy, to India and to Bangladesh. And to say it become a powerhouse would be a bit of a cliche, but it is actively developing it. And this is a different type of capital altogether. We then get into the realms of what you were saying about cost of capital, blended finance, especially currency. And currency risk there becomes Nepal's lucky in the sense that it's pegged to the Indian rupee, which at least is a major currency in itself. But it's still highly volatile. And I think a more affordable solution to, if the question is what blended finance could make the most difference, we're working closely with PIDGE and particularly Guarantco, and we're trying to issue bonds in Indian rupees, offshore Indian rupees, called masala bonds. But the cost of hedging is understandably high because it's very risky. But unfortunately, it's prohibitively high. I'm not saying it's wrong, it's the wrong price from a risk pricing perspective, but it's unaffordable and nobody would take a loan at that price. So until we put enough subsidy, I'm sorry to use that word, behind these blended finance techniques, I find myself in the infrastructure space going to say PIDGE, which is backed by the UK government, the, you know, I don't know which governments, the Australian, I think, German, etc., Swiss. And then I get a price, and then I go back to a different branch of the British and Swiss government to say, well, I need some grants because there's no way anybody will pay that. It's an incredibly inefficient way of raising money. If you want to scale blended finance, you need to offer things like currency hedges or guarantees at a price where somebody in Nepal would pay that for a loan. And I think this is a major structural change that needs to happen in the blended finance community for capital markets type products. If you really want to open, especially for infrastructure, for long-term infrastructure, capital markets, the British ambassador in Nepal has this great talk where he talks about the bridge from Kathmandu to London. And he means the financial markets of London. And it might be London, it might be New York, it might be. And I think some of us on this panel have talked about that. What are the steps to get there? If you haven't got a BBB- credit rating, you need to buy one. If you've got a currency, the Nepalese rupee doesn't trade very much on the London FX markets. So, you know, you need solutions to that. And I think a lot more work needs to be done. But I'm very excited about both of these markets. We're one of the biggest, if not the biggest, foreign equity investor in renewable energy. We're certainly the biggest equity investor in technology, AI companies. And honestly, you know, just to finish, to see, I can't tell you when the listing is going to be. It's all filed for. It's all public information. I can't say much about it. But to see one of our companies with a ticker symbol on NASDAQ, yes, it's not the size of Microsoft or NVIDIA. It's a very small company in comparison. But it's almost like a YPro moment for India. It's almost the role. I've talked about role models. India has seen a lot of success stories, successful entrepreneurs that did it correctly and have made money and helped people and planet. I think this, you know, when we first, about a year ago, filed our first S4, our filing listing, it was front page news in Nepal newspapers. You know, Nepal, technically it's an American holding company, but a Nepal origin company listing on NASDAQ. Even if the share price drops, it's still a massive thing. And so I think creating role models is a big part of the ecosystem alongside the ecosystem building that we're all doing together.
Chiwu, Acumen, you spoke about blended finance. I wanted to expand and beyond blended finance. Are there any more innovative structures that you're thinking about, different investment tools? Yeah, if you could shed some light on how you're using creative ways to overcome barriers to investment.
Actually, as Tom said, local currency financing is very much needed, but it's actually very hard from the traditional investor perspective to do it in many of the countries. Maybe I would love to share one transaction that we did in Malawi. So we found one local company who has huge potential for growth. And then they are actually doing really well, electrifying Malawi better than anyone, I would say, in Malawi. And then when we looked into their financials and discussed about what should be the right structure for us to invest in this company, they need the US dollar to buy the inventories because inventories are denominated in US dollar, but they are selling the product in local currency to the people who's actually living off-grid in remote areas. So, you know, if they get the US dollar loan, it's going to hurt the company. If we provide the local currency loan, they have to convert it into US dollar to buy the inventories. Then in the process, there will be a lot of leakage. So what should we do? So what we did is actually we provided US dollar loan for them to buy inventories, but we structured it as they can repay us in local currency. But as investor, it's hard for us to bear the local currency risk. So what we did is we entered cross-currency swap with one of the swap provider. But as Tom said, the cost of hedging is very, very high. And if you think of the cost of hedging in countries like Malawi, it was the level that we can't really do the deal with the companies. So what happened was EU actually provided subsidy to mitigate the cost of the hedging. So it was actually the deal that we did all together, Acumen, as investor, the company who came up with the ideas how we can actually structure the right deal for them, and EU who provides the subsidy to it, and then the hedging provider. There's not a lot of hedging providers in Malawi. So we actually worked together, I would say, for more than a year to get to the final structure. But at the end, we were able to provide US dollar loan, and we actually got repaid in local currency. So that could be one of the examples how we can work together to actually structure the right instrument to the companies in hardest reach countries.
Great, thanks. And Alan, from your perspective as an asset manager, what would help you de-risk some of your investments to look more at frontier markets?
The thing we've talked about the currency risk. I think that's one of the most important because it's, as we said, it's difficult to hedge that risk. Now, I'd like to say a few things about the role of BII and other DFIs. I think you've already played a great role, for example, in bringing companies along that escalator and bringing them to the institutional capital market, which we believe is absolutely crucial. And I'm going to tell you why I think that. We've spoken a few minutes ago about the cost of financing. We talked about the rating agency, an African rating agency. But friends, let's look at it. Even with the same rating, right? With the same rating, African companies tend to pay 200 basis points on top of similarly rated companies from other emerging markets. I'm not talking companies from developed markets. Now, how do we fight that? How do we beat that giant, which is the perception risk? For me, there's one word. It's familiarity. We need the financial markets to become more familiar, and to do so, we need to bring more companies to that side of the escalator. And you have done that in the past, BI. I remember you participating with some private equities and bringing, for example, the likes of Helios, bringing Helios to the market. Helios, as I said, I've had 25 years of career. With Helios is the first time that in my professional life we talked about Democratic Republic of Congo. So by bringing those type of companies to the market, you shed the light on some areas that have been untapped, and you help markets familiarize themselves with those credits. Now, we've talked about the idea of size, and I think we need to talk about size because the problem is huge. The SDG gap, funding gap, is $4 trillion, right? So we need to make big steps. We need to make big issuance. And when you ask about instruments, I think one of the things that DFIs can do is when we don't have the national champions, when we don't have the regional champions who can come in this market and issue $150, $300, and $500 million, there are structures when you can pool a few credits into a single instrument. Remember, I mentioned instrument at the beginning. That's, for example, the initiative of Impact Investing Exchange, IIX, which I know you've supported as well. So more of these could be welcome to bridge that gap whilst companies come through the escalator. So there's a bit of technical assistance to bring to make those companies aware of what it takes to reach those financial markets, but also providing some structures who can really get past the issue of the lack of size of individual companies.
Thanks. My next question is around resilience. So we spoke about the needs for ecosystems to be built around investment, but sometimes, you know, and this isn't something specific to frontier markets, but there are crises, there are political crises, ecological, etc. And recently, Tim, in Nepal, there was a bit of a political crisis, even though it's stabilized quite quickly. But from your perspective, you know, what does it take to make the ecosystem resilient, and what role do we as DFIs play in supporting the resilience of the ecosystem?
Yeah, I'm in the hot seat in terms of political instability at the moment. Nepal, you've probably all seen, had a revolution. It was a 36-hour revolution, but not to make light of it, 72 mostly protesters died. And resilience. You know, if I look at our first fund, had its first close in 2014. In that 11 years, less than 1 year in, we had an earthquake that killed 9,000. We've had a change of government every 3 to 9 months since then. And now we've got another change of government, not voluntarily, let's just say. So, you know, I'm just thinking about the earthquake. What I remember thinking, I was living in Kathmandu and we had 2 children at the time. Everybody survived, everybody was fine. My wife's family was fine. And the most remarkable thing happened, how the community got together and how people remembered. If that happened in Britain and there's no electricity and no running water, I mean, no supermarket, so we wouldn't know what to do. People there still remember. They've only come from the village in the last few years or perhaps a generation ago. They're making fires, they're picking the vegetables they're growing. It's unbelievable resilience. This is risk management that I didn't learn in the course at London Business School. So I think these countries' resilience is built in. This particular revolution is not massively different for us as investors than any other change in government. I think we spend much of our life getting to know the new personalities of a new government. Every time the ministers change, the bureaucrats change, and you have to keep getting to know them. I think what is different about this one is a big positive. And I'm going to say a word that isn't often said, but it's perhaps the most important thing in frontier markets, and that's this revolution was against corruption. And corruption had become a major problem. The tipping point was a lot of adult children of politicians got into the habit of filming themselves going to Paris and buying Gucci bags on the salary of a Nepalese politician. I don't think so. And I think that just tipped over, and people who are struggling to get a driving license, let alone set up a business, suddenly lost it. And that's what was behind it. So I think within a week or 10 days, we had a new technocratic government that is known for its anti-corruption stance. The individuals, I think, will benefit from that. But unless we can tackle corruption, at least the systemic sort, it's going to be very difficult to develop these markets. And I want to say that BII is not unique, but is the leader in having a business integrity team. And if there's one area that I think has added most value relative to others, everybody has a strong environmental and social governance team. You guys have the leadership in business integrity. And I can't say enough how much you've helped to structure both our own fund, but also our portfolio companies to enhance corporate governance, to apply checks and balances, internal audits, to make sure that the promoters we're investing in are sure of their own organizations. So in that environment, we're all responsible. I actually find this topic fascinating as an academic at the University of Nottingham. I research it. I talk with your academics as well. They come in and talk about research papers I've written. But that's what this particular revolution was about. But Nepal is resilient. It's bounced back immediately. It's going to enjoy the Diwali holidays and it'll be back in business. It's not as bad as the earthquake.
Great, thank you. So my final question before we take some questions from the answers to you, Chucks. We have a really great audience here in the room, lots of leaders from impact investors, DFIs, ecosystem builders. Looking ahead into the future, next 5 years, where should we get to in terms of the topics that we've discussed? What should people here take away and think about?
I think the thing that we're all doing the best we can. It's all great, but we have to remember that where we are now is still on decades of what we used to call jobless growth. Mm-hmm. So we've had significant population increase, particularly in our continent, Africa, and we are definitely doing the best. We're doing really amazing things, but it's not really touching the last mile. We're missing that wide mile. And that's the question for all of us. And when you mix that with our demographic trends in our continent, where even now in Sierra Leone, I think the number is 70% of people are under 25. So what we're seeing around these revolutions are actually Gen Z revolutions. They're not, these are not elderly people, well, in the case of the ones who are worried about their parents, their kids, but generally you're seeing a generational push. So we've got to really drill down on that, understand. And I think part of it would actually come from first doing more research, intergenerational research, to understand what people's expectations are, what their needs are. But we with the ways that things have happened, and I'm going back now 40 years with the restructuring of states and what provision there is at the state level, it means that we're much more exposed to the market vagaries today. And so it's going to be quite challenging. We can talk about projects, and we're all doing great projects, but this is actually quite systemic. So I think that the next 5 years, our challenge is to see how we address these systemic features of inequality in an environment where the state is no longer the accepted instrument for addressing these challenges. So there's going to have to be a need for us to really scale up. And if we don't have governments able with the resources to do it, but the resources are in hedge funds and all the people who have made tons of money, then we're going to have to find ways of making that work. So for me, that's the challenge that I see going forward. That's a small one, though. I mean, I'm sure you can.
Great, thank you so much. So we'll open up to Q&A now. Hopefully we have some mics. And I think there's some questions online as well. Any questions in the room? John?
Good afternoon. My name is John Chikatano. I'm with Pangea Africa, a business advisory service provider based in Ghana, Sierra Leone, and Senegal. My question is about the demand for capital. And I'll start with a quote from Devin Chesney of Aspen Institute, who said that the financing gap, the multi-trillion-dollar financing gap, is fictional. And by that, he meant that if you look at the pipeline of companies that are actually even close to investment ready, it's only a very, very small fraction of what we call this financing gap. So my question is, what can we do to innovate on the demand side? There are enormous and great innovations happening on the supply side with blended finance and commercial banks and impact funds. But what are we doing on the so-called technical assistance or transaction advisory or investment facilitation side to build that pipeline to transition from the theoretical financing gap, as it says, to an actual pipeline of bankable companies? Thank you.
Great, thank you. We'll collate a couple more, and then we'll let the panel have some time to think about the answers as well. Laurie?
Thank you. Laurie Spengler. I'm a board member of BII. Very proud to be here and part of this conversation. Thank you to the Chief Minister, to the High Commissioner, and the panelists. My question, I'm going to go back to the supply side, appreciating the demand side question. One group of actors we haven't talked about are domestic institutional capital investors. We've talked about angel, diaspora, but we haven't really talked about domestic. And when we think about the challenges in mobilizing and attracting more capital to address spotting of opportunities, to address FX risk, to address the risk perception, they're a critical participant in building the community. So my question, maybe also, if I may, to the Chief Minister and High Commissioner, as well as the panelists, what's one thing we as public sector actors and DFIs can do to encourage and support more participation, particularly from pension funds, sovereign wealth funds, that are up? Not every country has the same depth in the community, but when we look across Africa, there's a lot of domiciled wealth in Africa. So given the leadership point that you both led with, what can we do to encourage more participation in part of the community? Thank you.
Thank you. Maybe one more question, and then we'll try to answer. I don't know if we have any online or any final one in the room. Okay, we can take these two in that case. So maybe, who would like to take the first question on the demand side? I'd also love to chip in on that one, if that's allowed by the moderator.
Go ahead, Alex. Go ahead.
Okay, great. So I wanted to actually share a story, John, from today, where we had the Chilean Investment Forum. And there's one company there called So Pure, which signed a deal with a commercial investor called Svilo. And this is a company that just a few years ago was a small family-run business. I think they should be here in the room somewhere. And we met with the company. We were introduced by another company. started talking, introduced them to EcoBank, with whom we did a risk share facility. Investor Loan provided technical assistance, and they accessed the risk share facility. And 1 year later, they're now accessing commercial capital internationally to build a recycling plant because they produce sachet water. And this is a real story of this escalator where, with just a bit of support, just some introductions and some technical assistance to make that company investment ready, that company is really taking off now. So I think that's just a really great example of, with just a little bit hand-holding and support, these fantastic entrepreneurs can achieve great things.
So I thank you for your question. I think this is, again, as part of this whole paradigm shift, tapping into domestic capital in our part of the world is important. But this now, and this is a very current conversation at the, I don't know if it was at the same Andy meeting that John is referring to, but where we talked about this. And the lament, well, the point was being made in the context of financing these local businesses, that the perception of the risk is not actually the risk at the firm level, it's at the systemic level of macroeconomic management. And therefore it brings back the emphasis on getting the macroeconomics right. Otherwise, this is, the whole issue. All we're doing is, when we're trying to do all these currency fixes, is because of bad policies. So there has to be this emphasis and this very, very rigorous, consistent. Obviously we know that COVID did introduce, some additional challenges, but this is an ongoing issue of macroeconomic policy management, which is really important, which brings us back to, again, these are systemic issues. They're not one-off things. And this is where we really need to have and to institutionalize public-private dialogue so that policymakers have the opportunity to understand the implications of the choices that they're making. And when some of that money is actually people's social security, their pensions, the political economic dynamics will shift significantly. So I think it's a really important area that we need to really address, and I think that's really helpful. Just on, Alex, on your point, the question is, how do we, again, we do TA, and we're very happy that SoPure is one of the companies, and we really belatedly ran and stood in the picture because we were also very proud of the fact that this has happened. But how do we systematize that? How the TA gets added and then it's quite costly because of the way we do it, it's at a retail level? Are we really working with institutions? How do we begin to strengthen the ecosystem to the point where at every level, right from the bottom of the escalator, the right cost structure of the TA is available all the way up to the very, very unique, very specialist sorts of things? I think that's where we need to get to at the moment, because definitely the way we're doing TA isn't sustainable. You can't take that to much greater scale. So that's the question for us. How do we do that and really think about that? And that takes us into, as I said, institutions on the ground, right at the local levels. And we've got to think, I think, very differently. I think once we accept that it's a systemic problem, as opposed to something that projects here and there can address, we might actually think differently.
Just very briefly on the first question, there are always two rooms. The rooms that says we don't have enough projects, and then there's another room which says, oh, we don't see the assets, the money is not coming. And to get that gap closed a little bit more, we have to realize that there are more companies which are almost ready than we think there are. And it just takes a little bit, sometimes awareness. How many times have I talked to a CFO and said, oh, you have all these debts amalgamated somewhere. Would you gather that into one bond and issue in the financial market? They need to understand also the pros and cons. And we do have, I'm not going to give the name of a company, we do have national champions who have not issued on the market yet, and they would be ready to do so. I think it's a collective effort to bring more of these to the market and to bring the cost of financing lower. The last thing I would say is, I love the point about the local markets, because when you look at emerging markets and the volatility of these markets, there's one factor that brings the volatility down. It's the presence of local investors.
Exactly.
We're talking Turkey, Look at the volatility of the currency and everything. Because there are a lot of local investors, the bonds are less volatile. And we invest in Turkey, Argentina, everything. Wherever you have that, I think there should be an incentive for the pool of money, the pension funds, to invest in the local economy, and especially on corporates, not just buying sovereign bonds. That would be my point.
Absolutely. Great, thank you. To you. And then Chief Minister, and then we have to finish.
Right. So, you know, the demand side of issues, we don't have a lot of bankable projects. I think that's exactly why Acumen has designed hardest reach in 2 different vehicles, because we need patient capital to make the company more sustainable and bankable at the same time. It's not only investment. TA is needed, and TA has to be tailored to address the issues of the company. And then when we get to the debt funds, where we can invest the debt, then that's where I believe the opportunity to work together with local banks, because local banks are not exactly in the space of corporate investment yet. And then I believe we have been doing this for more than 15 years. And then if we can partner with local banks to provide 2-tranche investment, we provide US dollar, they provide local currency, because the companies need both. If we can be much more collaborative and then talk to each other to find the solutions, that should be the way that we should go, I believe.
Thank you. I think it's such a great question, and thanks for asking it. 2 examples that demonstrate why we need TA. As we were preparing for this summit, I was with the Vice President and President Bio on Tuesday. And President Bio was saying, no, the Vice President was saying, he has, when he was growing up, there's this Fula businessman, he's a family businessman. Every time he goes to the family's house, they say this guy has gone somewhere to his construction site. And he one day asked to say, why is it that you're always at the construction site? And the guy said, every time I have more than $200,000 in my account, I don't know how to spend it. I have to build a house. So this guy has lots of houses because he makes lots of money, above $200,000, he has to spend it. What he needed was that there are other ways of investing those $200,000 that is not just the house. And that is such an example of how we tap into those markets. Another opposite example, and there's somebody in the room who's been developing a set of stoves and solutions in Sierra Leone. She has worked with government for years to sign an MOU, worked with us, gone everywhere, and governments just had not gotten to do it. And today, the AG and Tim finally unlocked that and signed. And you really didn't need to wait for 1-2 years to enable that local entrepreneur who's already supplying markets in Sierra Leone. So she needs that MOU to be able to get the financing assurances from people in this room to move to the next level. And finally, there's a young lawyer who is with us in the team, back speaking to TA. That family, that Fula family, needed support from that this set of lawyers who understand the local context. This entrepreneur also can benefit from that TA. And it's not just TA that comes from London and New York. It has to be TA that comes from Freetown, who understands how to go and unlock whatever. And the Minister of Innovation actually has been working and proposing to work with those lawyers to see how they can support those SMEs to benefit. So it's not just the financing, it's tools of how to unblock those. The problem of you have too much money you don't know how to spend, and one where you just don't have the right levers to unblock what you need to unblock. Thank you.
Thank you so much. Thank you so much, ladies and gentlemen, for joining us during this Frontier Markets event, Impact Equals. We spoke on this panel about innovative financing, blended financing, the role of different partners coming into capital structures. We explored the ecosystem question and how to bring more of systemic impact into the frontier markets which we look at. the role of DFIs, the role of different investors. We also spoke about trying to get to scale because of the needs. So hopefully everyone took away something, and we look forward to seeing you investing in frontier markets and building the ecosystems as well. Thank you.
Thank you.